The 5 this morning's video validated was already complete when it went out, and the market spent the whole day testing it. Wave 5 topped at 65,744, hours before that video even published, so the count it showed you was already finished work, top in place. From 63,810, Wave 1 gained 665 points. Wave 2 gave back a third and held the origin. Wave 3 ran almost twice the first. Wave 4 cleared the top of 1 by over 400 points. 5 added 852. Every hard rule passes. The second wave held its origin. The fourth never entered the first, and the third is not the shortest. A complete impulse checked joint by joint. Then the day went to work on it. 11 hours after the top, Bitcoin had given back 1,326 points, and that pullback deserves a closer look than the daily frame can give. So here are those 12 hourly candles under the lens. Measured against the whole advance, the day surrendered 68.6% of it, deeper than the halfway line and, on the face of it, deeper than the golden level itself. Or is it? The golden retracement of the advance sits at 64,549. That is the level a second wave is expected to respect, and it is where the whole day came down to a single candle. On the wick, the level broke. The low of the day printed 64,418, 131 points through the golden line at the extreme. On the close, it never broke at all. The lowest hourly close of the entire day stopped at 64,554, $5 above the level. Every single hour closed on the safe side of it. That gap is the whole evening in one picture. There is a wick world where the level failed and a close world where it held 12 times out of 12. This channel measures structure on closes at this time frame, and on closes, the golden level did its job. The deepest test was rejected. One sentence from this morning has to be rewritten. I said that under 64,892 the new 5 had failed. That sentence was written for a 5 still under construction. A completed impulse is allowed to be retraced, and deeply, without failing anything. The day closed under that old line 3 times, and nothing broke, because the question moved up a degree. Reading 1. The 5 from 63,810 is wave 1 of a larger advance. Today's drop is its second wave, deep but inside the usual band, and Rule 1 gives it a hard floor. It may not trade under its own origin. Reading 2 is just as legal. C waves are 5s as well, so the same impulse can be wave C, the final leg of the bounce from 63,739. On that reading the bounce is finished, and it died 1,211 points under the roof. The roof has not moved, 66,956 untouched for 6 days now, the level the last bullish count broke against and the reference above everything else. Above, the trigger is simple. Through 65,744, wave 1 prints a higher high and the bullish reading confirms, with room toward the roof. Below, lose the golden level on a close, and 64,224 is the next shelf. Under 63,810, Rule 1 fails, the 5 was wave C, and the decline is back on. Under the bounce low, the original third wave down runs again. And look where the market parked for the night. $4 under the old line between the halfway mark and the golden level, the one place on this chart where both readings stay alive until tomorrow. So, a finished 5, a golden level held on every close, and one floor that settles the argument. This is educational analysis, never advice. The next update starts from that floor.